Hello to all crypto traders and welcome to another Elliott Waves on Cryptos. It's been a week, maybe even over a week already, and I'm back for another video for the QIC community. You guys, nearly 22,000 of you, have voted for another Elliott Wave analysis. This time I'm going to do BTC anyway because we missed it last week because you were all so over Sol and Luna, and I'm going to do BTC and ADA. ADA, of course, is the winner of this week's poll. We do, of course, have Engine and VeChain as well, very close, but perhaps next time, if you push a bit further, a bit more, we can analyze those ones too. So we're gonna start with BTC, see at the main scenario and also the alternative scenario, see where we are in the, structurally speaking, in the cycle, what are the probabilities of another move higher, of another move lower, and also similarly, we're gonna see that for ADA. Now, this is educational. There is no investment advice here, and it shouldn't constitute any of that. So let's go to the charts. And as always, feel free to leave your comments on the YouTube section, as well as now you can find me on Twitter, follow me there, or on Telegram where I run my premium channel. If you want to join for a trial, send me a direct message on Telegram and we can take it from there. Let's go to the charts to see what the cryptocurrency markets has in store for us. So I would like to start with BTC, but I want to go a little bit further out just to remind you guys what is the longer term structure here and what are all those lines popping, right? So we're looking at a cycle wave move here. We are in the fifth wave. The bull run, the bull leg of this cycle, it's not finished. Out of question. I can see 1, 2, 3 for sure. The fourth is either in or not. So we expect the fifth wave anyway. Okay. Now, let me just be honest here. Do you want to know what is the potential for the fifth wave? Let's just go and where did it start? Did it start at like 0.2 cents? That's like nearly zero. We use the 618, the 032, 1618. Okay, we're good here. But the truth is that since we've got wave 3 and 4 in, okay, this is where we'll go. So 141K, if we look at the cycle structure, okay, 41K. Now, if we look at the primary structure, without wave 4 being in, we're looking at 200K, then 424. If we consider or assume our fourth wave ended at the 29K, we're looking at 94K next. This is again in the primary degree. What we need to do is we need to take all those levels, guys, and see which of those levels come in confluence. Okay, the confluence levels are the ones that they are stronger. Okay, equally, we can go and get, for example, 3 and 4 here. And you see we were very close to doing the 38.2, but we'll probably do the 23.6 or 27 point, hold on, let me just type it, 27.4. Yeah. So we're somewhere between there. But this one is just like something that it's already in, so we're not going to consider it. Anyway, we've got here these lines. They are the base channel and the acceleration channel. The acceleration channel is the one that connects waves 1 and 3 and goes up. The base one is that connects waves 2 and 4, okay, and still goes up. Now, why are they important? Well, they give us really support and resistance levels, even midway through, you know, the upside move, because currently we're looking at two base channels, two channels. Price is trading within both of them, right? So we are looking bullish in the long term, okay? Don't get me wrong. We are definitely looking bullish. Now, if we go a little bit closer though and look at this red channel, yeah, This is the primary degree, the green letters, guys. Yes, we're looking at the acceleration channel. Okay, you can see I connected wave 1 and 3, yeah, and wave 2. So usually what happens, yeah, and I'm just saying usually what happens, prices on wave 4 go down to this channel, to meet this channel and then continue higher up. Okay, I'm not saying we're going to go there, but I'm saying that this is usually what happens with channels. This is the channeling technique. Okay, we're going to talk about whether are high probabilities for prices to move lower, okay, and why, rather than just purely base this on the channeling technique. It's not what I'm showing you here, right? Now, the base channel of this primary degree, as you can see, we start from 0, we connect 2, we connect 1, and basically 0 and 2, right? I'm not saying 4 is going to come down here. We cannot go down there because we want 4 to be above 1, so we're remaining impulsive to the upside, right? So what I'm seeing here, though, with this sort of slope to the upside, I'm saying that in case we do get lower down, that there is very good chances that we might see a confluence in prices, right? Over here in the two channels around the 22K, but that is going to be like with the around the 20th of March of 2020, which still, we base this on the channeling technique. We're not, it's just that something to keep in mind for the medium to longer term, okay, into 2022. Until then, obviously, we'll know if this is going to happen because we will know whether we're going to get another leg down or not, okay? And this is most of the debate, that there will be analysts that come and tell you, yeah, we're going up, guys. The bull run is not finished. But let me just tell you this. No serious analyst will tell you that there is no downside risk. No serious analyst. And I will tell you why. You must be familiar with Fibonacci's, right? The 61.8, which is called the golden ratio, okay? It's not, prices have not even reached that level, guys, okay? We have not even reached that level. So that is one of the components I'm looking currently. This is at 51.15 or so, okay? This is my 61.8 Fibonacci. Let's break that level first, okay? To reduce the probabilities of moving lower. Let's break the 57.11.3 to reduce the probabilities of moving lower even more. And let's break the 61 for the probabilities of moving lower down nearly diminishing, okay? Until we see that break, I remain with my main scenario unchanged, that we are moving lower down. And why? If you know, markets move in 5s and 3s, okay? So the the 5 waves to the downside or to the upside, let's just take the downside since we're looking at a bearish move here. We want 5 waves down and we want 3 waves up. This is the progress and this is the regress called, okay? So in terms of this sort of regress, we didn't even correct properly, okay? Usually when we have an ABC correction, which I don't have that here, as you can see, I'm looking at expanding flat with a extended wave C here. I will explain why. I just don't like how extended this wave A is in. This A and B and C to me looks much more structurally speaking orthodox than having a huge wave 1 here that if you pull for an ending diagonal, you know, you either connect, you know, the 2 and the 4, or you connect the 0 and the 2. You know, it just doesn't look, I mean, it doesn't supposed to look beautiful, but it doesn't look as good as this looks to me, okay? And this, of course, is my personal conviction, okay? Now, also, a lot of analysts see this as an ABC, okay, which is a flat pattern. And my question to them is, when did you ever see a flat pattern having an extended wave C that goes over 161.8 Fibonacci extension? Because I've never seen one. If you have, please tell me the date and the asset, and I will go look at it, and then I can change also my count. But as long as I don't have proof that history is backing this up, I don't support it. WX and Y, leg Y can extend. 2618 can extend even longer, okay? So since we have an ABC and ABC here, we are expecting another ABC, okay? So this is a double zigzag, okay? My wave A is here and my wave B is here, and I'm expecting wave C to finish, okay? Now, there is, of course, something that I don't like here, as well as I didn't like up here, right? This is ABC, and my wave C is an ending diagonal. My wave C being wave 1 over here, right? Wave 2, wave 3, wave 4, and wave 5. I'm expecting the fifth to go higher up to around the 51, 51. Who knows? Maybe we're going to get a false break above the 61.8 Fibonacci. But what I don't like here as well is the fact that if we take that leg to the downside, hold on, it actually looks much better, but you know, we do have some sort of false break here for the diagonal, okay? It doesn't mean we cannot have an ending diagonal, another leg up, but it means that the probabilities now are a bit lower, okay? Similarly to what I didn't like here, if you see this trend line, for example, if we connect these two, I mean, look at this divergence over here. We did get the false break in the beginning, so if we get something similar, then we're going to get a pattern over here that I don't like again. So, but for now, we remain unchanged, okay? This is a false break, and we are going to see what's going to happen. But for now, this is what I'm looking, guys, okay? And you might say, why not 3, 4, and 5 here? That makes a very nice diagonal, right? And I will tell you this. I will tell you that the longevity, the duration of wave 1 and wave 2 compared to wave 3, 4, and 5, it doesn't make sense. That is the reason. You might also see some other analysts calling this a diagonal. You know, we're broken down and we're going to move lower down. There's no diagonal here, guys. I don't know how these guys, where did they learn from, but this is not a diagonal. For diagonal, you need to have an interaction between the waves, okay? If that was a 1, 2, 3, 4, and 5, you need to have interaction between the first and the fourth. You understand that? So focus on things like that, because a lot of people don't know what they're talking about. Now, either we're going to get another leg up and then continue lower down with another leg here as an ABC. Okay, it can be an ending diagonal or an ABC, and internally it can include pretty much not any but several patterns. There can be a lot of combinations there. Or although I don't like it, maybe we finished up here. Yeah, this is my ending diagonal in C, and this is a leading diagonal. We're going to get wave 2, 3, 4, and 5 for ABC. Okay, that ABC might, you know, have a long wave C here below the previous low, but, you know, and where we're going to head, obviously, we're going to have a better projection when we get closer to having completed 5 waves first. Okay, then we can look at the projections. For now, it's pointless. Or, as I said before, we might get another leg up and from there continue lower down. Now, I want to take you a little bit further into the 1 hour, okay? And I want to show you from closer, excuse me, I'm just trying to delete this small dot. I want to show you that there is 2 different variations here, okay? One is that this is an A, B, and a C. So we expect another leg down, and then we're going to continue higher up with another ABC to do this sort of ending diagonal, yeah, which doesn't look much diagonal, but much better than the one we saw to the top of 64, 65K. Or this is a leading diagonal, open variation of the leading diagonal, which means that most likely we're going to see prices correcting, and usually leading diagonals correct quite a bit of the trending leg, right? Usually they go to the 78.6. So we might see prices going up to 49.60, and so, which is likely to be our validation level for the leading diagonal if we cross above that level. So it's likely to be, if we break above that level, if we go up, obviously, it's likely to be an ABC. If we don't break above the 50, obviously we're still valid, but the probabilities of having a leading diagonal are going to be smaller. Okay, if we break above that level, most likely we're going for the fifth wave of this ending diagonal. Okay, now the alternative, because we're looking at the main with its variations. The alternative is this, that guys, we did a finish down here, which to me looks a bit weird, because for that to be the case, it means that in here we have a triangle and down here we have a truncation. That's my 5. So that's a W, that's an X, and that's a Y. And then this one is 1 and this one is 2. And this one is, 3. We'll get the 4 and we'll get the 5 and we'll continue higher up. But then I've got a lot of questions about this count. First of all, my triangle, it's not, a triangle is supposed to last longer than the correction in wave 2, especially when it's just a zigzag. So this triangle is quite small for the sort of structure that it belongs to, first. Second, truncation, yes, maybe correctly identified because it came in after the market moved fast, yeah, and far. But the question is, we do have a fresh low here below that truncation, for example. Why are we going to assume that this is our 5 and not this? That's the biggest question here, right? And then the other question is that if that is indeed the case, yeah, we have my wave X over here, then that means that my wave X didn't even correct 38.2. Let me tell you this, that I have never seen a wave X correcting 38.2. No, not even that actually. Wave X is correct deeper. Why? Because the purpose of a combination is the fact that the correction that initially happened was not enough for the particular structure. I hope that makes sense. So wave X corrects deeper, usually 61, 78, 80, 90%, you know? And more importantly, this is not a 5-wave move. This is not a 5-wave move, and it cannot be a leading diagonal, okay? First of all, wave 3 and below, if that was a diagonal, the wave 1. So it's impossible. This is violation of the rule of diagonal. Someone say, what about this? That's my 1 and truncated 1. No, we cannot have truncations. Yeah, I just said it. The 5 has to be higher than 3. Okay, this is not a 1. This cannot be a wave 1. Okay, unless if that is 1, this is A, B, and C. Okay, so we're looking at an expanded flat over here with an ending diagonal in wave C. Okay, which is fair. And then we're looking at 1 and 2, and we're looking at, well, probably again at 1 and 2, and that would be 3, 4, and 5. It's just becoming a bit more complicated, guys, because the truth is this. When we're moving up, especially after a bottom, we don't move in smaller waves. We move up in extended waves, especially the third one. So we should be expecting to see something like this, especially in cryptos, the wave 5 as well, rather than something like 1, 2, 3, 4, and 5, which has shorter waves, shorter range. So diagonals and triangles are the ones that they are getting smaller and smaller as time passes. But impulses don't. It's very unusual to see something like this. Okay, it's not impossible, but it's unusual. It means that my wave 1 is extended, my wave 3 is not much, you know, that's like 3, probably another flat here, 4 and 5. Okay, still we expect a big correction. Yeah, that would be 1 and 2, 3, 4, and 5. Okay, and that would be our wave 1 in the bigger degree. And what we are going to see, obviously, in case we move lower down, we're going to expect that correction. Well, first of all, we need to stay above the 42.78. So if we break 72.78, most likely my main scenario is going to come into play. Now, I'm not saying my scenario. It's not like my scenario. This is what the markets are showing, right? I cannot change this scenario until we break that level, okay? Because probability wise, this is what it's valid. Now, the ending diagonal, yes, maybe it's not going to be still valid if we move lower, much lower down. But for now, we are good, okay? We are okay still. If that changes, obviously, we are going to adopt with the new market data. So that's for BTC. Let's jump on ADA. And of course, I'm gonna go out again, okay? To show you the long-term structure. My wave 1, my wave 2, my wave 3, my wave 4, my wave 5. Here we have even further continuation to the upside, okay? We have more room to move up. We're still in wave 3, not in 5 as in Bitcoin. But internally, we are, obviously, right? So what I'm showing you here, yeah, and I'm not taking into account the primary degree here, I'm taking into account mainly the intermediate. We've got 1, 2, and 3, right? This is the beginning of the 107, the high, right, on March 3rd, 18. We had this is actually called an irregular first wave, guys, because the prices went below the initial price. I've had someone arguing with me like months ago, how can you label this? And the guy was saying that nobody is including this in their analysis. I'm like, what? How is that possible? This is data. You cannot ignore data. Get real, guys. So this is an irregular first wave, okay? Because prices move beyond the beginning. My 2, my 3, my 4, internally. Let me go down on the 4 hours. We've got 1, 2, 3, 4, and 5 again, right? Oops, excuse me. 1, 2, 3, 4, and 5 again. My 1, my 2, my 3, my 4, my 5. You see here, acceleration channel. My 1 and my 3 and go down to 2. Look where we're coming. Yeah, we've bounced off this channel and we moved higher up. Okay, that was a very good false break over here. That was a bear trap. Yeah, a bear trap. So we've had a very nice triangle. These two corrections make sense to be in the same degree as well. And these two in the minor degree. This one is a bit bigger, but it's okay because we're sideways markets in wave 4 usually. Very good patterns, okay? Very good patterns. And now we are looking at what? We're looking at 1, 2, 3, 4, and 5, the last leg to the upside, if it hasn't already been in, okay? Now, shall we just do another channeling, another channel over here, just to see where we are? And look at this. Acceleration. And on my 2. Excuse me. And that's my channel, guys. Okay, so we've got 1 and 2, that WX and Y, double zigzag here, yeah. 1, 2, 3, 4, 5 internally. We've got the 3 and the 4. Very nice corrections in both 2 and 4. Yeah. And then we've got, this is what I'm looking, right? We've got 1 and 2. And internally we have 1, 2, 3, 4, and 5. Yeah. And then 3, 4, and 5. This is a probability. Okay. When I say 4, I mean more likely to down to this channel. I want to come down here and correct somehow like this or whatever. It doesn't matter what the pattern is going to be. We just want a fresh low below 246, okay? To assume that the fifth wave is in. Now, of course, do not forget that that can also be read as 1, 2, 3, 4, and 5 here. And that's still a 1, 2, 3, 4, and 5, which means we ended the fifth wave up here, guys. So pay close attention. This is a risky long and a risky short at the same time in the medium term, right? Because this looks like 1, 2, 3, 4, and 5. It can be A or it can be a 1. And that can be a B or it can be a 2, which means we can get 3 or C, and 4 and 5. If it's 3, you're going to get in 4 and 5, which means we have a bigger downside, okay? So you might say, but dude, look at this. This is like corrective. Well, it's not corrective, I guarantee you. It's impulsive. Let me show you. Hold on. Sometimes I just have to delete those. Look at this. 1 and 2, 3. 1, 2, 3, 4, 5. That's my 4, a triangle. And 1, 2, 3, 4, and 5. That's my A. Okay, and then you've got 1, 2. 1, 2, 3, 4, 5. 4, 5. perhaps. That would be the A. We can get the B and we can get the C and then move lower 5 waves down. Or that might be A, that might be B, and that might be 1, 2, 3, 4, 5. We're going to get our C and then move lower down very soon. Okay. Now, let me tell you something about the triangle here, guys, because you see an interaction here and you think this is corrective. When we have a triangle or a running flat, we have to look at the wave 4. My wave 4 is ending here at 278, does not end at 284. Okay, know this. This is considered as an impulse to the downside, not as a correction. Okay, good. Now, ABC, right? But if, you know, we're going to move higher and we break the 284 or so, okay, because simple corrections usually do the 50%. We're at the 61, heading to the 61, which means we're good. Actually, we can get there. We did that on the log scale, right? If we move higher up to 78.6, the chances of that having ended down here are going to increase. And that would mean that we'll have an ABC over here. That's my W, and that's A, B, C, D, E. That's an X. And this is A, B, and C again. And we'll have a W, X, and Y. Okay, and now we're heading higher. But again, on the higher, we can only move multi-structurally. Okay, only multi-structurally because of this structure over here. The thing is this though, guys. Okay, usually we get, hold on, we can get a double 4 as it's called, right? Because let me show you this. This is still 1, 2, 3, 4, and 5 on the minute degree, right? And that's going to be our 5. So that's still the 4 here, right? So usually what happens is a double 4 because we have 4 over here and 4 over here. The double 4 is what I'm expecting to happen, right? I'm going to see this, receiving a rejection, and then we're going to be clear for long, up to the previous stop perhaps, right? Because we never know where this can extend to. Having done though hold on. Oops, that was not supposed to be the case. One case. There we go. Just leave it there. We've done over here the 261.8 Fibonacci extension, guys. Okay, if we take waves 1 and 2, yeah, and we can even, since we've done 3 and 4, we can go all the way up. Yeah, and look at the 0 and 618. Look at this. We just start off. So I'll be really looking, if we get another leg up, I will be really looking at the $3. I wouldn't want to go higher than that, unless if everything turns positive. Everything, Bitcoin, Ethereum, okay, and the bull run continues. Only in that case. So, guys, if you have questions, do not hesitate to leave a comment on the YouTube section. I'll get back to you as soon as I can. I hope you did enjoy this video. And I hope to see you joining my YouTube channel. If you have sort of any personal requests, you can send me a message on Telegram. My details are on the About section and also on the caption in this video. Do not forget that I also run my Telegram channel now. So in case you want to have a test drive, let me know and we can take it from there. Thanks for watching and trade safe until next time.